Hi, a very warm welcome to each one of you, and welcome to another series of Investonomics. Today, we would be covering one of the most sought after investment tools we have in the domain of financial markets, which we call it as mutual fund. In our earlier session, which I took on equity investments, I might have said two things which are applicable today as well. That all of us have two goals in life. One, the first one would be the profession we are into or the company we are working for. We want to make our company richer. The second goal would be we want to make ourselves richer, right? So today, when we plan to discuss about the concept of mutual fund, the second goal which each one of us would have, that how I can make or how I can build wealth over a period of time, and how mutual funds can help me achieve that goal, is something we are trying to look at. Our objective would revolve around covering practically four parts, which are in the domain of the concept of MF. Second, what or why we should invest in MF, that is the advantage of investing into MF. Then, as a beginner or as somebody who has already invested, there is something to be known of, something new to be known to with respect to the different types of MF we have. And lastly, how to invest in an MF. So going by this explanation about an MF, normally, what exactly is an MF? And why we are discussing MF is something which many of us are familiar with, because these days we tend to see so many advertisements in print media, in television media, where at the end of the advertisement there would be a two-liner, two words: mutual fund sahi hai. So I'm not saying that I am manifesting that thought, but what I personally believe, over a period of time as an investor, plus after the today's session, we should be very, very close to going to the conclusion that why we should invest. So many of the answers of why not would be converting into why. That is our objective. Now, when we talk about a mutual fund, I normally say, instead of using a word called mutual fund, take it as a mutual fund scheme. That is ideally an appropriate way. So what exactly is it? I'll give a very small example. Many of us would be following cricket. And today, in fact, today IPL is also starting. And one of the most prominent players in the international circuit would be Virat Kohli. And in case you see him play, his entire cricketing kit, starting from bat, even gloves, even pads and everything, are being sponsored by a company called MRF. And many of you would be knowing MRF is a tire manufacturer company. And let's say all of us, let's say I'm just considering example, let's say there are 60 people who want to invest into this stock of MRF, because they believe that the prices of rubber would be very low. So जब भी raw material के prices कम होंगे, तो automatically profitability company का बढ़ेगा. And they have come to the conclusion that MRF is something which would be a viable option to invest. But the challenge each one of them is facing is that the current stock price of MRF is 65,000 rupees, which means in case somebody wants to buy one share of MRF, he or she has to invest how much? 65,000 rupees. I am cutting it down for the sake of simplicity to be 60,000 rupees. So the scenario is that we are 60 here. All of us want to invest into the stock of MRF. But the challenge is that we need to shell out, or we do not have, you can say, 60,000 rupees at one go to invest into the stock of MRF. Then what should we do? Then what we can do is, all of us can come together. All of us can come together. And we would be pooling. Let's say each one of us only have 1,000 rupees at our disposal. And that is a very, very practical scenario, because all of us have limited resources. So 1,000 rupees, each investor, 60 of them, they can come together. And what do they have? They have 60,000 rupees at their level. Through that 60,000 rupees, they can invest into the one stock of MRF. That is exactly how a mutual fund scheme would work. A mutual fund scheme is like, I can give one more example, is like Uber Pool and Ola Share, wherein passengers who need to travel to the common place or nearby to the common place, the market interface or the internet, the application would make them come together. Similarly, a mutual fund scheme is nothing but would be pooling the money from different investors who share a common investment objective. And that investment objective should match with the investment goal or objective of this scheme. In simple case, what exactly the investor want his money to do? क्या objective है? In case he wants to invest for long term, short term, medium term, accordingly, the investment objective of every scheme would also be slightly different. So he has to match both of them. In the last session on Investonomics, we had discussed about equity investments. And when we say investing into equity, our objective would has to be long term. So I want to create wealth. So when I want to create wealth, I would not be looking to invest for short term. So I would not be looking to invest into, let's say, a debt-oriented mutual fund scheme. I would like to invest into an equity-oriented mutual fund scheme. So one thing which each one of us should be aware of is that each and every mutual fund scheme, that is a pool of money, which I gave an example of 60,000 rupees, which was investing into MRF, that is one pool. So there can be different pools, and different pools are called different mutual fund schemes. And every mutual fund scheme would have investment objective, the purpose for which the money would be invested. And as I said, a mutual fund scheme is like Uber Pool and Ola Share, जहां पर driver भी होता है. Similarly, where here we would be having an expert who is called a fund manager. A fund manager would be investing the money as per the investment objective of a particular scheme. Primarily, whenever you are investing in a mutual fund scheme, you would be receiving gains, and that is the objective each one of us would have. The returns can come depending upon the option we choose. And in the subsequent slides, we have the two options we have. The two options we have is, we normally call it to be dividend and growth. So dividend is something which is like a regular income which can be received from a mutual fund scheme on the discretion of the fund manager. Fund manager को लगता है कि आपने scheme A में investment किया और आपने उसमें dividend option choose किया. So depending upon fund manager's discretion, he can give you some amount of cash flow. Let's say once in a year, some portion of the money would be received in form of a dividend. So we call it a dividend in each and every kind of scheme. So whether the scheme is investing into equity, whether the scheme is investing into debt, whether the scheme is investing into, let's say, a mix of all. And the second way is the rise in the value of the investment you have made. Two things more I would like to add here. Then I'll explain you the second part, that is capital appreciation. The first part of return is regular income, and the second part is capital gain or capital appreciation. In simple way, the selling price of investment in an MF is more than the purchase price. That is the objective. That is something we call capital gain. जितना आपने लगाया उससे ज़्यादा आपको मिला. Whenever we invest in any mutual fund scheme, we normally get units. So we are also called as unit holders. तो आपको क्या बोला जाएगा कि आप unit holders हैं. Second important चीज, each and every mutual fund scheme has an investment objective. So first thing you need to remember here is that many of us have this misconception that mutual funds are only invest into share market. That is not the case. Mutual funds can invest into any kind of investable class, asset class. It could be equity, it could be debt. These days it is into real estate as well, into gold as well, or in mix of both. Gold and silver both now, and in mix of all. The second thing which I was about to tell was, first was that you get units. Second is, whenever you invest in a mutual fund scheme, you can buy and sell it like what you do in case of any investable asset. And the unit or the price of every unit is called NAV, net asset value. And net asset value means the price can go up, the NAV can go up, or it can go down depending upon the investment which has been made by the fund manager. So fund manager ने जो investments करी हैं, जैसे equity fund है, fund manager ने 10 stocks खरीदी, तो 10 स्टॉक्स कैसा परफॉर्म करेंगी उसके ऊपर डिपेंड करेगा NAV इज गोइंग अप और NAV इज गोइंग डाउन. Any clarifications to anyone up till now, please? Any queries to anyone? Somebody had asked me at the start of this session that what are the different classifications and all. As I said, I'll be discussing the same in the as we move along. Now, the second aspect is what do we say with respect to the legal structure? Legal structure means how does the entire process works. Normally, in simple say, it's like more of an operation side. But when we say the entire structure, the mutual funds are created by a sponsor. A sponsor would manage, would be the promoter of a fund. So sponsor is like a promoter of a fund. And the sponsor, normally the schemes are launched by an entity called asset management company. So AMC is nothing but the company which would launch, asset management company which would launch the schemes. And in order to safeguard the interest of the investors, they would appoint, after in consultation with SEBI. SEBI is the regulator for all the mutual funds. Some of you might have heard about chit funds. कई लोग chit funds की बात करते हैं. The difference between chit fund and mutual fund is more of a semantic. सिर्फ fund का नाम common है, बाकी कुछ common नहीं है. Chit funds are not regulated by SEBI or they are regulated by each and every state government now. But mutual funds are, each and every mutual fund scheme is regulated by SEBI. And SEBI has said that you have to appoint a certain independent persons who are called as trustees. So in the every structure of any mutual fund, we need to have at least 4 trustees, and out of that 2/3 need to be independent. Independent मतलब उनका स्पॉन्सर से ना तो पर्सनल लेवल पे ना प्रोफेशनल लेवल पे कुछ भी रिलेशनशिप होता है. So they do not have any kind of personal or professional relationship with the client. With the client in the sense the sponsor issues. Now, asset management company would be the entity which would be launching the schemes, and wherever the funds would be invested. Let's say a mutual fund scheme has invested, one particular equity scheme has invested into 10 stocks. So those 10 stocks are kept with another third party which is called custodian. So consider yourself to be an investor. What cushion you have got, security you have got is the securities which have been bought with your money. Let's say all 60 of them, the example which I gave, all 60 of them have invested, have given the money to a fund manager. Fund manager ने वो पैसा कहाँ लगाया? MRF के स्टॉक. So MRF का स्टॉक किसके पास रखा जाएगा? That would be kept with custodian. Normally, custodian cannot be the sponsor. For example, any company which has any bank which could be a sponsor for any MF cannot be the custodian of its own mutual fund. So again, sense of security and safety to the investor. There would not be any case जहां पर हम ये बात कर सके कि investor का पैसा would be duped. No, there cannot be misuse because the money has been kept with virtually a third party. And thereafter we also have R&T agents which we normally call as registrar and transfer agents, who basically handle the back office operations. So investor के सारे records, आपको dividend receive होगा, redemption का proceeds आएगा. तो operations part can be outsourced by any AMC to these RTAs. It is up to the choice of the AMC. In few of the AMCs, they do not take the services of the RTA, but majority of the AMCs do tend to take the services of RTA. And now one thing which I would also like to share here is that over a period of time, one of the best things which have happened to the mutual fund industry is that in India, although we are still at a very nascent stage, normally अगर हम बात करते हैं world over size mutual fund industry का और Indian market का size, world over, let's say take an example, average अगर हम बात करें, average the size of on the basis of the economy, that is GDP हम जिसको बोलते हैं, world over 75% would be the average size, 75% of the GDP would be the size of the MF industry. world over. That is an average number. US का close to 100 more than 100 in fact. But India के case के अंदर क्या है? That is still at 15%. So we are still growing, but what I can also tell you is in the last 6 years or 5 years, I should say, the size of the mutual fund industry has grown almost at the rate of 17% annually. So whatever was the amount of money which was managed by all the mutual funds, let's say at the end of 2017, by 2021, I should say, December, the size has gone double. The size has gone double. So over a period of time, investors started accepting that the objective of having an MF in their portfolio. And somebody has asked me, are custodians private entities? They are private entities in India. There would be 20 entities which have been given the license to act in the capacity of custodian by SEBI. So custodians, again, both custodians or R&D agents have to have authorization from SEBI to work in the same capacity. I cannot start a custodian services on my own. No. I cannot start it. So there has to be a authorized person, which is normally 20 entities we have, which have been given the license to act in the capacity of custodian. Now, why should we invest into an MF? Or somebody or already some of the investors are already investing into MF. For them, these benefits would only vindicate the reason of continuing to stay investing in MF or adding on more money into an MF. These are the two aspects which I normally give. Starting with the first part. When I was talking about, let's say, I'm not being a state specific, but in states which have higher density of population in India, all those states tend to have a tool which is where the investors have invested money, which is called Chit funds. But one of the things which we can look around, which differentiates a product like MF with respect to any other product, would be the way it is being managed. Professional investment management, in simple way, would signify that just then say investor invest karna shuru karta from the time he starts investing until the time he has money. He keeps the money in the scheme. The entire scheme of things, everything is very, very systematically, professionally managed. As an investor, I can get to know, let's say I'm just sharing professionalism, I can get to know at what time I can invest and at what time I can redeem my amount. What is the price I have paid to buy one unit? How much money I have received, the selling price of 1 unit, let's say, on the other side. How much charges I have been asked to pay. So everything is professionally managed. Who is managing my fund, for example? That is the most critical piece of news which any investor would like to know. कि मेरा पैसा कौन मैनेज कर रहा है? जैसे उबर के अंदर आता है ना, ड्राइवर का नाम आता है, ये ओला के अंदर ड्राइवर का नाम आता है. Same thing is there in case of each and every scheme. Second, diversification. Very, very importantly, when we talk about diversification, as an investor, all of us should have, and many of you, in case you would have invested or would be investing, one thing we have learned or should be learning is that we should not park all our money in one asset class. जैसे हम कहते हैं ना, do not put all the eggs in one basket. That is something which we call as the reason behind is that we need to reduce our risk. So how can we reduce our risk? अपना risk कैसे कम कर सकते हैं? When we start putting in money into different avenues, different zones. Diversification कैसे achieve होता है MF में? As I said, let's say in case an equity fund is there. So you have invested into an equity oriented fund. And as I said last time, a few minutes back, when I was saying that a mutual fund scheme, the fund manager might be investing into multiple securities. So in case of an equity fund, he might not be investing only into one share. As per the rule, in case of an equity fund, the maximum investment into a single stock on most of the funds has to be 10%. So at least in any mutual fund scheme, you would have at least 10 shares. And you know and I know, कभी भी सारी के सारी कंपनीज चाहे एक सेम सेक्टर की भी होंगी, they would not go down or they would not rise by the same proportion, even if there is some positive or negative information which is impacting a particular sector industry. और जहां तक एमएफ का बात किया है तो वहां पर तो अलग अलग सेक्टर्स की अलग अलग सिक्योरिटीज फंड मैनेजर वुड बाय, सो ऑटोमेटिकली जो उसका दायरा है, जो उसका स्पेक्ट्रम है, वो ऑटोमेटिकली बढ़ गया, तो डाइवर्सिफिकेशन अचीव हो. थर्ड एंड मोस्ट इंपॉर्टेंट would be the amount of money you are invested. Every investor would like to start small, right? And हम सबके साथ again वही issue, limited resources. So limited resources कैसे? We are all professionals, so we are hard working and getting a hard-earned money, and we would be, apart from our expenses, whatever is left over, we would like to deploy that amount of money. So low investment को cater कैसे करें हम? That low investment can be used in investing into a tool like MMF. In case of a mutual fund scheme, we can start with as low as 100 or as low as even 500 rupees to start off with. So, as I said, all of us at the start, 60 of us, only had how many units? How much amount we had? Only 1,000. So through that 1,000 rupees, I can start something we will be discussing here, that is, many of you would be aware. We can start an SIP into an MF. So SIP, although we'll be discussing it ahead, just for the sake of understanding abhi ke liye, SIP is the way of investing into a mutual fund scheme. It is not a scheme. कई लोग बोलते हैं कि SIP में पैसा लगा दो, नहीं, SIP से पैसा लगा दो. So you have to basically choose a scheme, and the mode is whether you want to invest a higher amount of money, you can do it, or whether you can start with as low as 100 or 500 rupees, that you can do it, and that route is called SIP, and that route is provided by each and every mutual fund scheme. Then convenience and flexibility. With this, what I can say here is, whenever we tend to invest in an MF, one of the most advantages which an investor normally feel is, let's say you as an investor do not want to redeem all of your units. You want to redeem only one unit, you can do that. You want to redeem half of the units, you can do that. You want to invest more, you can do that. So there is a you want to move from one scheme to another scheme, you can also do that. You want to move from one option to another option, you can do that. For example, you want to move from dividend option to a growth option, you can do that. So these are the flexibilities which are offered to the investors. And liquidity, another advantage. In my books, liquidity should be the first criteria of choosing any investment avenue. I would always look into any investment option jahan par mere haath bande na ho. My hands are not locked, right? So when I say my hands are not locked, what I'm trying to say is whether investment can give me the benefit of exiting when I need money. No investor would like to take out money when he doesn't need it, until unless he doesn't need it. But jab usko paisa chahiye ho and he cannot get it back, that is a challenge which could be there in multiple investment options. In mutual fund schemes, we have these options wherein this liquidity is something which is more or less there. So I'm not differentiating, I'm not digging deep into details, but I can say, consider the type of schemes we have in India. Close to 1,479 schemes we have as on February 2022. 90% of them can be the one where you can enter or exit at any point of time. So let's say I am an AMC, I have started a scheme, and let's say after 2 years you want to move out from that scheme. So I would be giving you back the money and you would be giving me the units. So you would be redeeming the units and I would be giving the money back, whatever would be the value of that one unit at the end of 2 years. So whatever would be the NAV as this. So 90% of schemes tend to be of this nature, which we normally call it to be open-ended nature. I have got a query now. Why would a MF house change a fund manager? It depends upon two things. One, the fund manager himself might have moved out from that AMC to another AMC, right? That is it's like a job for him. That could be one reason. Second, it would depend upon the performance of the scheme. So in case a fund manager has not been able to do justice to the performance of a particular scheme, so the management, that is the AMC, might decide to move out that fund manager, maybe to some other scheme, some other type of scheme. That is the second objective. That would be the second one. A third could be in remote circumstances that the fund manager might have elevated himself in the same company. So many of the fund managers over a period of time can become, you can say, CIO, Chief Investment Officer. Chief Investment Officer is like a captain of all the fund managers. So in that case, that CIO might be earlier, let's say he might be managing, as a rule, a single fund manager can maximum manage 6 schemes. So he might be cutting down out of those 6 schemes. He might be only, let's say, managing 2 schemes because his role is now changed slightly. He has become the CIO. So that could be the third reason why the fund manager might be changed. Any queries to anyone up till now, please? Virendra, I hope I was able to answer your query. Any queries to anyone? Chaliye. Transparency, economies of scale, tax benefits. Tax benefits I'll take separately. But when we say transparency, I'll just give one example of this. As an investor, in case you have invested into a single mutual fund scheme A, सबसे बड़ा concern आपका क्या होगा कि fund manager, where has the fund manager invested the money? That concern is completely taken care of by the mechanism in which they share the portfolio of every scheme. So for example, at the end of every month, let's say today, after the 31st, what is the portfolio of a particular equity fund as on 31st March? That can come in the public domain, let's say by 10th of at the end of 10th, within 10 days after the end of the month. So by 10th April, you can get to know that. Now, Power, one more viewer has asked the question, how can investor know what compensation is being paid to the fund manager in absolute terms? What you can find out is in the sense that, say, we have something called, when we talk about the expense ratio, in the scheme statement of additional information we have as a document, therein you can find out, first and foremost, I would like to know, why would you like to know about the fund manager salary? As long as your expenses are taken care of. Your expenses are taken care of. In the sense, asset management company is launching a scheme, so they would definitely charge some amount of expenses, right? There are no free lunches in this world. So AMC would charge some fees, but as an investor, the maximum fees which can be charged by any scheme, which includes the AMC fees, is limited by SEBI to the extent of 2.25%, which in my books is very, very cheap of letting somebody else manage your money and manage your wealth. So within that 2.25%, some portion would be charged by AMC as an fees, and within that, some portion might be paid to the fund manager. In my books, that is something I would be, as an investor, I should be more worried about how much I am paying from my side to the overall scheme expense. I should not be worried about how much the fund manager is getting. In case you are asking it for the sake of moving up for your career perspective, that I do not know and that I would not answer. But as an investor, 2.25% is the maximum expense which has to be paid by, which can be asked by any scheme, by a charge against any scheme from the investor. But that would be variable. Some of the schemes might have 1.5% to 2%, but no scheme can have more than 2.25%. Economies of scale, in simple way, the more the cost of managing money through an MF would be comparatively cheaper in comparison to the same thing you would have done. Tax benefits, which we normally call it to be that under section 80C, we have multiple options where we can invest money, right? Some of you would be knowing it. NSC, National Savings Certificate, 5-year bank FD, PPF, EPF, and all that. Through mutual fund, we have one option which can help you out in giving the same tax rebate, that is ELSS. And because we are covering it here, so I wish to discuss it here as well. When we talk about ELSS, ELSS is one of the options which have been given to mutual funds to get rebate under section 80C of the Income Tax Act 1961. Primarily, 80% of the money in ELSS has to be invested into equity. तभी इसका नाम क्या है? Equity linked saving scheme. You can invest as much as you can. There is no upper limit. But for tax purposes, you would only get a tax rebate up to 1.5 lakh rupees. So let's say I have invested 5 lakh rupees in ELSS, I can invest. But I would only be getting tax rebate under section 80C to the extent of 1.5 lakh rupees. When we compare ELSS with other products, PPF, NSC, bank FDs, life insurance policies, and other products, two things which strike out. One, the returns are market linked. So there is nothing called guaranteed return. For example, PPF, although the interest rates can change on a quarterly basis, but it is currently 7.1%. And the entire money, in case you want to redeem the entire amount of money, you need to basically remain in the fund for at least 15 years. So there is a lock-in period of 15 years. ELSS ke andar, the lock-in period is only of 3 years. So in case you look around, why we can look around which we can look at it as an option. And right now we still have close to 4 days left over for filing our for income tax purposes. So in case somebody has not invested into in the ELSS, anything is left over in the 80C. So you can use ELSS as a gap amount which is left over, and from the next year you can take ELSS, or you should take ELSS as something which would be one of the right options to invest under section 80C. I'm not quoting any returns, but one of the most to do two aspects of ELSS which are to be highlighted. One is the time period. The lock-in period of ELSS is only 3 years. After 3 years, you can exit at any point of time, whether you want to stay for 10 years, 5 years, 12 years, 3 years, whatever, 3 years, 1 day, that is up to you. But you have to stay there for 3 years. Second advantage of ELSS would always be this. I am not quoting any return and not any fund process, any scheme. But as a category, ELSS have been mass return potential instrument. And I'm using mass very, very carefully. The returns have been superlative. In case you look around the data and everywhere, in case an ELSS fund would have been there in the year 2001, and I am deliberately taken 2001 as a time because 2001 se leke abhi tak, equity markets in India have seen different cycles. Anybody who would have invested, let's say, 20 rupees in ELSS as a category in the year 2001, the value would have been today close to 800 rupees. So 40 or 44 times has been the return of ELSS over a period of time. Again, not quoting it, I'm just talking about the category average, and this is how ELSS have performed over a long term. Any clarification anyone has with respect to ELSS? Because that is something which can be there as a query point. Any clarifications to anyone, please? It would be 1.5 lakhs. Just remember that part. 1.5 lakhs in a financial year. Any queries to anyone, please? Any questions? Now, as I said, whenever we are choosing a scheme, we can have two options. I can choose a dividend option, I can choose a growth option. When I say dividend option, iska naya naam bhi aa gaya. Many of you might have heard. We call it to be IDCW. IDCW, which is called income distribution capital withdrawal. I repeat, income distribution capital withdrawal, which further has two options, two names: payout or reinvestment. So dividend or IDCW is one of the same thing. And as an investor, let's say I've invested into a scheme A, an equity scheme A. So I have two options. I can either choose a IDCW or dividend option, as they say, or I can choose a growth option. When I choose this, I can choose either receiving money right now, or I can say that whatever dividends you are paying it to me, you can reinvest in the same scheme in my name. Growth option may you do not get anything, any cash flow in between. But what happens is the value of your portfolio increases with the NAV. So NAV of a growth fund, a growth option in any fund, any scheme. So in any scheme you have taken a growth option, you would not be getting any cash flows. But what would happen is the value of your portfolio would increase where the NAV would increase. So with NAV, as long as NAV would increase, the value of your portfolio would increase. And in case of you have chosen a dividend option or IDCW, it could be chosen by somebody who is like a retired individual who has invested into, let's say, a slightly less risky fund, which we'll be discussing the different types of or categories of fund. But wherever he has chosen invested money in an MF, he would like here, in between, I should start getting some amount of cash flows. So for a retired individual or somebody who needs some money in between, for him, dividend payout or IDCW payout can be one of the options he can choose. As I said, when we talk about growth option, the NAV would keep on increasing depending upon the performance of the fund. In case the fund is doing well, so the NAV would increase. Then when we talk about the dividend option, both dividend payout and dividend reinvestment. Payout means it's like हम बैंक FDs में पैसा लगाते हैं, FDs के अंदर हमें क्या मिलता है? इंटरेस्ट. सो इंटरेस्ट आपको पे आउट चाहिए या आपको इंटरेस्ट चाहिए कि रीइन्वेस्ट हो जाए, तो वो डिविडेंड रीइन्वेस्टमेंट ऑप्शन आपका वहां पर. Now very important, and somebody had some queries with respect to the different types of MF. And before I kickstart this concept, just I would also like to share that MF का सबसे बड़ा प्लस पॉइंट क्या है? It is like horses for courses. Horses for courses. In the sense, what do we say? That depending upon the type of your investment objective and what exactly any investor needs, we have solutions for each and every type of those queries or those needs. Starting with the first one, primarily when we say equity, so we are differentiating the mutual fund schemes on the basis of the asset class where the fund manager is investing money. So equity oriented mutual funds का मतलब हो गया investments कहाँ पे कर रहे हैं? Equity में. So when we talk about equity mutual funds, ideally you are investing in, you also want to invest for long term. Let's say you want to invest for 10 years for a goal of making your daughter study. Let's say you want to make her a doctor after 10 years from now. So that's 10 years, that goal has to be a goal which is directed towards growth oriented. Growth oriented in the sense it can give you capital appreciation. So that is your objective. So you are not looking for debt in that case. You might be looking to invest into an equity oriented mutual fund. So what all options we have within equity, we are discussing it now. First, multi-cap. And before I move on to this cap, many of us would be knowing in the basics of equity investments or normal literature. Cap means market value, the market value of any company, right? So when we say market value of any company means, let's say the value of a company, the number of shares of a company are 100, and the value and the price of every share is 10 rupees. 100 into 10 कितना हो गया? 1000. So 1000 is nothing but the market value of the company, which we also call it to be market cap. So these funds are classified on the basis of this concept. Multi-cap means you can invest into any kind of this capping: small cap, large cap, mid cap. These are the three classifications we have. Normally हम उसको rank करते हैं. Large cap बन जाता है first 100, mid cap बन जाता है 101 to 250, and 250 and above or beyond we call it to be small cap. So multi-cap would cover the entire domain. It's like moving money. The fund manager, depending upon the fund manager's requirement, he can shift the money from small, mid, or large cap as and when he feels it is the right time. Second, large cap would only be investing into large cap securities, which I said top 100 companies as per their market value or market cap. Large and mid cap, as per SEBI mandate, 35% each in large and mid cap. So at least 35% would be invested into large cap, and at least 35% has to be invested into mid cap. So you can say, अगर 35 इसमें है तो maybe 65 he is investing here, and in case he is investing 65 here, he might be investing 35% here. So it could be either ways. Mid cap, majority of the money, more than 65% of the money, mid and small cap have to be invested into respective mid cap and small cap part. And just to add one more, we also have these days flexi cap. So multi cap में और flexi cap में फर्क क्या आ गया? Flexi cap is, multi cap only takes into account the normal scenario. Multi cap में अब directions क्या हैं? At least 25% of the money has to be invested into either of the categories, large, mid and small. Flexi cap के अंदर क्या होता है? No foundations on the minimum investment into each of the categories, cap, small cap or mid cap or large cap. You have complete flexibility as a fund manager to shift the money from small to mid or mid to large in the flexi cap category. Now we have dividend yield funds, which can be used by somebody who is slightly conservative but still wants to invest into equity. I'll give a small example. We have many of the public sector companies like BPCL, HPCL, IOCL, Coal India and all, which pay a higher amount of dividend. So let's say currently, in case you look around the stock of BPCL, it might be paying a dividend yield of dividend yield का मतलब हो गया dividend per share divided by market price. So its current dividend yield is 12%. Considering its current price would be close to 360 rupees. So 12% is the dividend yield which is given by one of the examples which I gave, BPCL. So many of these companies, they tend to provide return more to the investor in form of regular cash flows, in form of dividends, rather than capital appreciation. So dividend yield funds क्या करते हैं? Dividend yield funds would be investing into such stocks, and that can be taken as a very, very good tool, specifically in slightly bear markets, जहां पर हमारा focus क्या होना चाहिए? Investing into, let's say, less risky stocks and primarily which might give us cash flow. So retired individuals के लिए भी dividend yield funds can be an option. Then we have value funds, contra funds, focus funds. What exactly is a value fund? Many of us would have heard about Warren Buffett, and the investment philosophy he believes is called value investing. So value funds would be investing into those stocks which are currently undervalued as per fund manager. Undervalued का मतलब है जिनका पोटेंशियल बहुत है बट मार्केट प्राइस आज की डेट में बहुत कम है एज पर फंड मैनेजर. Contra fund means, go by the name, they are differentiated in terms of that contrarian thinking है. Contrarian thinking का मतलब क्या हुआ? That investors tend to have, the fund manager tends to have some view which is different from the market. Let's say fund manager believes that currently real estate sector could be a good sector to invest. Reason? He believes interest rates are low. Whatever downfall real estate had to face, it has already seen. So he is saying that I am investing into. He has a contra fund where he's taking these opposite bets against majority of the market. और इसका ये मतलब नहीं है उसको ईगो है या कुछ ऐसा इशू है. He is doing it just because he has a rationale to do so. Focus funds tend to have a focus with respect to the number of securities they tend to have. जैसे इंडिया में सेबी का रूल है कि मैक्सिमम नंबर ऑफ शेयर्स और sorry, maximum number of shares which can be there in case of focus fund would be limited to 30. So they can be, you might see focus 25 funds, focus 30 funds. So they have the limited number, the maximum number is 30. Now sectoral or thematic funds, they would only be investing into one single sector. Let's say a fund which is only investing into banking stocks, that is called a sectoral fund, banking fund. But a thematic fund would be slightly having higher coverage. Example, infrastructure. Infrastructure is a thematic theme. And within infrastructure, we would be having multiple sectors like capital goods, cement, oil and gas, education, construction, shipping, aviation. So all those are nothing but theme, part of infrastructure. But in case I'm only investing into, let's say, cement stocks only, cement sector. So that would become a sectoral fund. Point to be noted, in case you want to take higher amount of risk, always remember, as a starter, you can choose into large cap oriented funds or you can choose into diversified equity funds. As a young investor, you can invest into mid cap and small cap funds. Because you have more time, you can take slightly higher amount of risk because they give you higher returns as well in the long run. And as somebody who wants to take more risk or some portion of a young investor's portfolio can be invested into certain sectoral or thematic funds, which can give you higher returns with slightly higher amount of risk, which is possible to be adopted or absorbed by a young investor. ELSS I have already told you. Any queries to anyone, I would be happy to take in any of the equity funds we have discussed. Please. Any of the queries anyone have in the equity funds? Again, I repeat, all these equity funds are there at different dishes we have in a restaurant. It depends upon what you want to taste. That would depend upon the kind of risk you want to take and the time period you want to park the money for. Any queries to anyone, please? कोई clarification किसी को पूछ सकते हैं? In the equity funds we have covered. Any queries? Idly, Manoj sir, we have one more type of fund which you can add. I would say two options. When we talk about from an entire person perspective, you can choose either an index fund or you can choose a large cap fund. So a large cap or an index fund could be a good tool to invest for a retired person, because for a retired person in my books, at least 20% of a retired investor's portfolio should be invested into equity, because inflation is something which hits us. So post retirement as well, inflation, in case you only invest into debt, his inflation risk would not be covered. So large cap or index funds can be chosen by a retired person. Any other query, please? Any other query? Fine. Now, different types of debt funds. Normally, anybody who wants to invest for generating income, let's say short-term goal, 2 or 3 years ka goal hai. In that case, what has to be done? And he doesn't want to take too much risk. So, in that case, what can we look for is certain category of debt funds. Yes, Index funds are type of equity funds. So you can either choose index funds or large cap funds. Primarily, both the funds tend to perform from the same basket of securities. So index funds might be giving us virtually a returns which are like a straight line kind of returns, would not move much from the Sensex. But large cap funds can outbeat Sensex. So debt funds के अंदर the categorization is on this very simple, either on the basis of time or on the basis of issuer. So जितने time के लिए आप investment करना चाहते हैं, you can choose those kinds of debt funds. So overnight funds, liquid funds, ultra short duration funds, low duration funds, short duration fund, medium duration funds. All of them are differentiated on the basis of time. I repeat, time. That their portfolio is, let's say, a low duration fund is suitable for any investor who wants to invest for, let's say, 10 months. There could be an investor who would say, next year, or let's say, December में, I would like to buy a car because December में car prices are cheaper. क्योंकि मॉडल ईयर चेंज होता है तो प्राइसेस सबसे कम होते हैं. So which investment tool I can take in the mutual fund domain? I do not want to invest into an FD. I do not want to invest in a savings account. Where should I invest in an FD? Then in that case, you can look for a low duration fund, which would be having a time period close to what you're looking at, 9 to 10 months. Between 6 to 12, effectively 9 months on an average. Then the second category, categorization in case of a debt fund would be, as I said, medium duration fund, then medium to long duration fund. And again, the differentiating point would always be time, 4 to 7 years, 7 years and all. Then we have dynamic bond funds, which play with the fund manager can be flexible. Then the second aspect in case of debt funds would be that they can be differentiated on the basis of who is issuing debt securities. Normally, debt securities can be issued by government and non-government security entities. जैसे ICICI Bank has issued bonds or debentures, I should say. So that is a corporate debt. But Government of India has issued bonds. Then in that case, that is a government issue. Government is a issue. So when we have corporate bonds or credit risk funds, here majority of the money would be invested into non-government securities. I repeat, non-government securities in the sense we say corporate issuers. So companies are debenture issue किया, तो उसके अंदर investment किया. And practically whether it is credit risk fund or corporate bond funds, they only they are different only from the perspective of credit risk funds slightly take more risk in comparison to corporate bond, and the risk is risk of default. Then banking and PSU fund, again debt securities of banking and PSUs, banks and PSUs. Gilt fund means gilt का मतलब होता है something which is as good as gold. And ideally अगर आप गूगल करेंगे तो gold का synonym क्या होता है? gilt. Manoj ji, you can ask please. I am waiting. I am moving to debt because debt is something I do not want to give too much importance right now because Manoj ji, challenge ये है कि debt के ऊपर we do not have much to dwell upon, to be precise. मगर मैं I am repeating, in case you have any query with respect to understanding any of the debt funds, I am right here. Now when we talk about gilt funds का मतलब होता है which are investing only into government bonds, government securities. अगर आप gilt का synonym ढूंढेंगे ना, गिल्ट का सिनोनिम ढूंढेंगे GILT, तो गिल्ट का अगर सिनोनिम ढूंढेंगे, गिल्ट का मतलब होता है समथिंग व्हिच इज एज गुड एज गोल्ड. सो व्हेन आई टॉक अबाउट समथिंग व्हिच इज एज गुड एज गोल्ड, रीजन बिकॉज गवर्नमेंट बॉन्ड्स डू नॉट डिफॉल्ट. आई रिपीट, गवर्नमेंट सिक्योरिटीज डू नॉट डिफॉल्ट. सो गवर्नमेंट सिक्योरिटीज डू नॉट डिफॉल्ट. In that case, they are part of gilt securities, and the fund which is only investing or primarily investing into government bonds, we call them to be gilt funds. Then we have floating rate funds. Please go by the name. Manoj ji, I cannot share the PPT. I am not allowed, but I'll cover your point. Liquid and short duration funds. Just give me a second. Floater funds would be investing into डेट सिक्योरिटीज जहां पर इंटरेस्ट रेट फ्लक्चुएट करता रहता है. नॉर्मली गवर्नमेंट ऑफ इंडिया ने भी ऐसी सिक्योरिटीज इशू करी हैं जहां पे इंटरेस्ट रेट्स वुड कीप ऑन चेंजिंग. नाउ somebody had asked me about liquid funds and short duration funds. Now liquid funds normally can be looked in from anybody who wants to invest up to 3 months time. Let's say 2 महीने बाद या 3 महीने बाद आपको कुछ vehicle खरीदना है. So instead of putting the money into a savings account, you can invest into a liquid fund. And one thing I also want to tell you here is these funds do not, these funds do not have a maturity. So as an investor, you can enter and exit any point of time. What we are saying, the kind of security that wherein the fund manager would be investing money has these features. So liquid funds के अंदर no, liquid funds after 7 days there is no exit load in liquid funds, and after 7 days there would not be any exit load in other funds apart from maybe some of the debt funds in the category of, let's say, longer duration funds. Overnight funds do not have any exit load. Let's say normally I know a company which invests in many of the companies. What they do not need money for Saturday, Sunday. So what they do, they invest on Friday and take back on Monday, because the money and that investment is made in overnight funds where there is no entry or exit charge. And the advantage is when we talk about overnight fund, even if the return could be as low as 4%, but in current account you would not be getting a single amount, and 4% on a 5,000 crore rupees of investment would come for one day. At least it would, the returns would come in some lakhs. So that is what overnight funds can be used for. Liquid funds, again, to park in the money for short-term purposes. I would say liquid funds, even liquid funds or ultra short duration funds, both of them can be taken as an investment tool when you want to hold the money for, let's say, 3 to 6 months time. And after 7 days, there would not be any exit load in case of a liquid fund. And ultra short duration funds, maybe 7 दिन के बाद effectively, very few ultra short duration funds might be having, in case you redeem the money within 3 months, they might have some amount of exit load. But I would say out of, let's say, 50 odd short, let's say 35 odd or ultra short duration funds, maybe 2 or 3 might be having it. Remaining of them not have any exit loads or exit charges. Any queries anyone has into the debt funds part, please? Any queries anyone in the debt funds part? Fine. I am moving ahead. In case anyone has any queries, I would look at the questions again, and you can just type in the chat box and I would revert back on the same. Now the third category is mix of both. हमने पढ़ा equity, second we have discussed debt. Now hybrid. Hybrid means combination of equity and debt. And this can be very well suitable depending upon the kind of investor we have. Let's say you are in the middle of, somebody is 45 to 50 years of age. So he is basically looking for investing on a money where their allocation has to be there, something in equity and something in the remaining portion debt. So he can look into these hybrid schemes where the allocation would reshuffle from equity and debt. The first is conservative hybrid fund, wherein, and very easy to understand the name, please. Conservative means wherein the money would be invested more into less risky assets, that is debt, and a smaller portion into equity. So 10 to 25% into equity and remaining 85 to 90% into, or I should say 75 to 90% into debt. Balanced funds or balanced hybrid funds would be having, let's say, 50% equity and debt. So this can also be looked into from the perspective of any investor who is having a moderate risk profile. जिसका risk appetite moderate है, average. Then aggressive hybrid fund, where we are saying we are increasing the allocation towards equity, but some portion for the sake of safety, or I can say security, has been kept where? In the debt part. Dynamic is asset allocation, and this is a word many of you would have heard. Balance advantage. Here the fund manager can reshuffle the allocation between equity and debt, depending upon his view with respect to how each of these markets would be shaping up. Multi-asset allocation. Here the investment can be done into equity, debt, or into gold, 3 assets, where at least 10% has to be invested into each of the assets class. For example, 10% at least into debt, gold, 10% into debt, and the remaining 80% might be invested into equity, or vice versa. Then I'll come to equity savings, and then I'll come to arbitrage. Equity savings, going by the name, at least 10% should be invested into debt, the remaining in equity. Minimum investment debt has been given a mandate, कम से कम 10% होना चाहिए debt में, बाकी 65% into equity. Arbitrage funds, काफी लोगों ने शायद सुना हो. They are, in my books, they are the least risky funds which are investing into equity, and the returns are, because we are not doing taxation today, but the returns on a post-tax basis would be highly efficient. So I'm just throwing a dice in front of you. You guys can also look at your level whenever you get time. Equal arbitrage funds are very good tool to invest money. Let's say in case you want to keep the money, you are not looking for a very high return, but you are looking for a high post-tax return in comparison to putting in the money into, let's say, even an FD. So 15 months के लिए अगर आपको investment करना है, so arbitrage funds can give you higher post-tax returns than even your fixed deposits. Then solution-oriented funds, we have 2 types. Either we are trying to provide answers to 2 questions. One is retirement, second is children's fund. Primarily retirement fund के अंदर lock-in period होता है दोनों funds के अंदर, at least 5 years or retirement age, whichever is lower. And in case of children's fund, at least 5 years or when the children will attain maturity. इसमें एक और important चीज याद रखना है आपको. These funds have multiple options. Primarily, let's say retirement के अंदर, it can have different plans. Aggressive भी हो सकता है, conservative भी या moderate. Then Manoj had asked me about index funds. We were talking about which funds, right? So you can say equity funds in case they are investing into a particular benchmark for a retired individual. Equity index funds can be chosen. These days, we also have index funds which are investing into debt or securities only. So we have debt index funds as well. So their objective is very straightforward, copying the benchmark. So अगर एक index fund है based upon equity, वो किसको copy करेगा? Sensex and Nifty में से एक index. Then we have fund of funds which are investing abroad. So anybody who is looking to invest abroad, many people have this inclination these days कि मुझे investment करना है कहाँ पर? FANG stocks के अंदर, Facebook, Apple, Alphabet, Netflix, and Google, right? We have a mechanism, we can do it directly as well as on the platform ICICIdirect, but through these funds as well, you can invest the money into stocks or securities which are listed outside. Any queries to anyone, please, up till now? Any queries to anyone? Any queries? Anything anyone wants to know, please, I'm happy to take. Any queries? Any questions? Even it could be as basic as you want to know. We have tried to cover equity. We have covered debt, equity, hybrid. Hybrid means combination of equity and debt. We've also tried to cover. Yes. Now, what exactly is arbitrage? Arbitrage in simple way means that, let's say, McDonald's ka burger is coming at a McDonald's burger in Chandigarh is a Mac Aloo Tikki burger is currently priced at, I guess, 41 rupees. So let's say 41 rupees का आ रहा है Delhi के एक part में, and 45 rupees का आ रहा है the same burger with same quantity in some other place in Delhi. So what would you do? You would buy where it is cheap and sell where it is expensive. Similarly, different stocks which are trading on BSE and NSE, they might be trading at certain price differences. Arbitrage funds में fund manager would basically use this mispricing. He would buy this stock in the exchange where it is cheap, and he would sell in the index or in this exchange where it is expensive. So normally it's a high volume trade. So they would buy and sell the same stock in large quantities, and automatically what would happen? There would be a price difference they would like to capture. For example, a stock of ICICI Bank might be trading at 720 in BSE and 720.50 in NSE. So the difference of 50 rupees is nothing but arbitrage profit. That is a fund manager would be looking at. The only thing I would say, they come under the category of taxation they have, when we'll be doing our next session in times to come on taxation, or you can read on your own. Taxation of arbitrage funds is equity, which gives them the tax efficiency in terms of returns on an after tax basis. Post tax basis, your return on arbitrage funds would be as good as or more than that, in fact, what you would have got in a fixed deposit. As when we say how to check the exit load, entry load, Manojji, from August 2009, SEBI has disbanded this practice of entry load. So no fund can charge entry load any longer. Exit load, you can find out the exit load whenever you are investing on our platform as well. Whenever you are choosing to select a particular scheme, at the end they would have a, in somewhere they would be mentioned that this fund would be having an exit charge or exit load of this much amount. Plus, in case you wish to redeem it, they would definitely give a trigger. Okay, there would be an exit charge in case you are redeeming it within a stipulated time. In case you still want to look into it, you can look into the scheme information document, or I should say SID or KIM, जिसे कहते हैं KIM, or even fund fact sheet, wherein you can get the information about the exit load which is applicable on that particular scheme. Entry load is no longer there. Now I'll take these terms, frequently used terms, ahead, but before that I wanted to cover this part, please, because these glossaries items can be taken care of. Now, as an investor, the question which comes in our mind is how to get started. Simple logic is the purpose of my investment. What is my goal? For example, as I gave an example, somebody has a goal. Somebody has a goal of investing for 10 years. Reason being, he wants to educate her daughter in a particular medical college. So that goal is something which requires a proper wealth creation, because you know and I know the rate of change in the medical education in the prices would be as close as 10% every year. You know that 10% every year badega. So I need an asset which can give me more than 10% on an annual basis. In that case, you would be looking to invest into an equity-oriented mutual fund. Whether you should look for equity or not, that would also depend upon the time factor. Normally, we say we should invest in equity-oriented mutual funds only when we have a time horizon of at least 3 years. Below 3 years, equity markets can be volatile. Yes, currently, right now, markets are volatile, right? So that those scenarios can be there. So in order to cover up them, we need to look around. We should have a focus of a time horizon of at least 3 years. And the risk factor, risk appetite. Let's say a retired individual would not be the right person to be advised or to be looking for investing majority of his portfolio into equity. No. Some portion can be invested to cover up inflation. But when we say for our young investor, yes, he has more risk appetite because he has more time. He can recoup the risk, recoup the volatility because he has more time. So those things can be considered when you are investing into any of the types of mutual fund schemes. So goal importance, goal kab karna hai achieve, goal kya hai, first what is the type of goal we have, how far the goal is, and how much risk you can take. Now there are two ways of investing money. One, lump sum. Second, in a gradual manner, every month, or let's say I'm just taking an example, every month you want to invest. So there are two options. You can invest, let's say 50,000 rupees at one go, or you can invest 4,250 rupees every month for the next 12 months. Now, many of us would have followed Warren Buffett, right? And he gives some examples. कुछ उन्होंने quotes किए. उसमें से एक मेरा favorite quote है. First save, then spend. 4,000 rupees, 4,250 rupees, which you are parking in form of or as an SIP tool into any of the mutual fund scheme, that is serving your purpose of this objective. First save and then invest. Always remember, SIP is a tool to invest in a mutual fund scheme. SIP is not a scheme. First. So किसी भी scheme में पैसा लगाने के we have two ways. One, you can invest lump sum, or you can invest in a systematic manner, in a broken way, in a tranches. You can choose a start date of an SIP, you can choose an end date of an SIP, and the amount of SIP as well. Normally the SIP amount is as low as 100 rupees. On most of the funds, it would be 500 or 1,000 rupees. And this is a very, very effective tool of inculcating the habit of saving. क्योंकि 4,000 रुपए हर महीने जाएंगे ना, आपकी जेब पे बर्डन नहीं पड़ेगा. In case I'll ask you, set aside 50,000 rupees at one go, then you would think twice. But in case I'll say you can park out or shell out 4,250 rupees every month, then you say, yes, I am in a comfortable situation, I can do that. So first advantage of SIP is inculcating the habit of investing or saving. Second advantage is this. It helps in power of compounding. This is just a small example that in case somebody would have invested 1,000 rupees a month, starting at the age of, let's say, 25. So 35 years invest karta, 12 months in a year, 12,000 per year effectively, 1,000 rupees a month. In case it would have grown by a meager 8% rate of return, then his worth at the age of 60 years would have been a 4,20,000 rupees of investment would have given him 24 lakh rupees approximately. And this 8% has been taken as, even I would say, even by a very, very conservative estimate, this is a very, very lower rate. The actual rate would be much, much higher. Ideally, 12%, 11 to 12%, double digit numbers in the long run, equity would definitely give. Debt ke case mein 8 would be there, but normally we choose SIP more in the as a mode of investment in the equity funds category, in the equity funds. So the power of compounding is the benefit which we can get by investing smaller. So there are two things to be taken care of here. एक तो जितनी जल्दी स्टार्ट करेंगे उतना ज्यादा वेल्थ आपका क्रिएट होगा, and you would have more time to basically enjoy the benefits and recoup any of the volatilities. Second advantage of SIP would be that because in my books, and normally people say, normally nobody can predict the market, specifically equity markets. अगर आप yes, power of compounding तिलक जी, पावर ऑफ कंपाउंडिंग का मतलब हुआ कितने लेवल ऑफ ग्रो करेगा. जैसे अगर आप देखते हैं ना, अगर आप प्रैक्टिकली देखें, अगर आपको कंटिन्यूअसली 20% रिटर्न आ रहा है एनुअली, कंपाउंडिंग रिटर्न, तो 20 साल बाद उसका इफेक्ट कितना होगा? अगर आप मल्टीपल टाइम्स देखेंगे, इट वुड हैव ग्रोन बाय 40 टाइम्स, 40 or 45 times. Now nobody can time the market, specifically equity markets. So what is the best solution we have when we cannot time the market? The best solution is to stay invested. The best solution is to stay invested. So when I do not know the bottom of the market, and I'm talking about equity, and I do not know the top, nobody knew that Sensex would cross 60,000, and nobody knew that Sensex would have gone down to 8,300 in the year 2009. Then the best course of action is to stay invested. SIP के अंदर बेस्ट एडवांटेज है, over a period of time you would buy, you would accumulate units both when the fund is moving up and at the same time when the fund is moving down, or even in the volatile market. So you would be able to accumulate units at different points of time. So instead of investing lump sum, the challenge with lump sum is, in case your timing has to be very, very correct. In case somebody would have invested in the March 2020, then lump sum return would have given handsome returns. But hardly anybody knew that markets would get doubled, or equity markets would see a double shift on the upside in 2 years' time. Nobody knew, right? So SIP gives us the benefit of averaging our cost, and we call it to be Rupee cost averaging. So you would be able to accumulate units at every level. And remember, you can choose the start date, you can choose the end date of an SIP. Now every fund would have a riskometer. Let's say a sector fund would be coming here, very high risk. So they have, SEBI has basically shifted from 5 degrees to 6 degrees now. So low would be something like a liquid fund or overnight fund. Moderately high could be a balanced fund, or a very high could be a sector fund. Now there are certain terms which I would like to explain, and then I'll open the floor again for Q&A. NAV, we know, I've told you. AUM means the total amount of money managed by a scheme, and the total amount of money managed by a scheme, and of all these schemes would give me the AUM of the entire mutual fund industry. Right now, it has grown from somewhere 17 lakh crores in 2017 to 38 lakh crores as on February 2022. Still, it is only 15%. I repeat, 15% of the GDP or the size of the economy, and it has seen huge shift, and times to come, it would again see a more shift because of the kind of investment product we have. Regulation wise, yes. Performance wise, yes. And once you start investing, you inculcate the habit, have some patience. Specifically when we are investing into equity, always remember, equity investments are like buying a sapling. It would become a plant, and a plant will become a tree, but it has to be given time to become a tree. Exit load is charged depending upon scheme to scheme. Normally equity funds tend to have exit load. Almost all the equity funds would have an exit load of, let's say, 1% from the date of, in case you redeem within 364 days or within 365 days from the date of investment. NFO, whenever the scheme comes for the very first time, we call it to be an NFO. Redemption price, the price at which you would be able to get your units at the time of redemption. So it is like, in case we have an exit load of 1% and the price was 10 rupees, the NAV was 10 rupees. So 10 and 99%, which is 9 rupees 90 paisa, that would be your redemption price. Expense ratio, as somebody had asked in the audience, expense ratio is capped to the extent of 2.25% by SEBI. So the maximum expense ratio that can be charged by a scheme is 2.25%, and majority of the schemes will be charging under this band only. Government securities, treasury bills, non-convertible debentures are the type of debt securities we have. R&T agents, SEBI, I've already told you. Now, we have an option on our platform ICICIdirect which is called one-click investment, wherein the advantage is that you can, on the basis of hardcore research, some baskets are being created. Basket in the sense, depending upon for the purpose for which you are investing money. For example, somebody say that I want to find out a basket of those funds, schemes, which would help me in achieving wealth creation. So we have given a basket for wealth creation. So you can choose. Once you choose, let's say you might be asked to invest 25,000 rupees, and that 25,000 rupees would be invested into 5 funds or 4 funds, which we believe, depending upon our own hardcore research, we believe can achieve wealth creation for your portfolio. So you can choose this. Once we choose this, so automatically you have 2 options. You can buy or you can do an SIP. Tilak sir, hybrid funds have more expense ratio? No. As I said, the maximum expense ratio would be only for, in fact, fund of funds tend to have the maximum expense ratio irrespective of the amount they manage, which is 2.25%. No fund in India can have an expense ratio of more than 2.25%. Apart from that, I'm talking about the basic TER. There could be some pluses and minus. Some funds 0.23, 0.20, 0.30, that could be an extra amount, but that is based upon some other rationale, which is basically in case a particular scheme is taking more pain of getting money from tier 2 cities or tier 3 cities. Only in their cases, they are allowed to charge slightly more. But uske upar bhi capping hai, that can be 0.30%. So this is what we have, the potential in the sense, let's say whatever option you want to choose, you want to choose the option for wealth creation. So we can have one click as an option, wherein they have basket of portfolios where you can, basket of mutual fund schemes where you can invest your money. And once you choose it, proceed it, and you can keep the start date, end date. Once you click on proceed, it is like you are getting a entire snapshot of frequency of investments for how many periods, nominee's name, and amount invested, the current NAV, and this is how it would work. And you'll also get the message at the start. You have successfully registered for this. Now the floor is open for all. Any queries to anyone with respect to whatever we have covered, please? Any queries to anyone, please? I'm happy to take. Any queries? Any queries to anyone, please? In case anyone wants to know something more. Thank you. That was the objective. Objective was to impart within the time frame we have to share some piece of information about the concept of mutual funds. I hope I was able to do some amount of justice to and add to what you already knew or did not knew. So it is always a pleasure to be part of this session. So thoroughly enjoyed it. But we still have time. So in case somebody wants to put forth any questions, Hindi, English, whatever medium you want, I'm happy to take. I only know 2 languages, Hindi or English. So no other languages I can entertain. Sorry. Fine. Thank you very much. Please keep learning, keep reading, and we'll meet again. Thank you.